What's going on, everyone? It's Blockwave here, and welcome to the channel. Today, we're diving deep into the thrilling world of Bitcoin. Now, if you're into finance, tech, or just plain curiosity, you've probably heard about Bitcoin's wild ride. It's been making headlines for years, with its price skyrocketing one minute and plummeting the next. Welcome to our in-depth analysis of Bitcoin's major price declines and future projections. We're not just going to scratch the surface here, we're going deep, dissecting the major crashes, the reasons behind them, and most importantly, what the experts predict for Bitcoin's future. Whether you're a seasoned investor or just starting to explore the world of cryptocurrency, understanding Bitcoin's past is crucial for navigating its future. So buckle up, grab your notebooks, and get ready for a wild ride as we explore Bitcoin's roller coaster journey. 1. Early volatility. Let's rewind to 2011, the early days of Bitcoin. It hit a high of $32, crazy, right? Then, boom, it crashed to $2, a 94% drop. What caused this? Security breaches. Remember Mt. Gox? The biggest Bitcoin exchange got hacked. Imagine your bank gets robbed. You'd be hesitant, right? This hack was a major blow to Bitcoin's reputation. Bitcoin was new and experimental. This was a wake-up call. But Bitcoin is resilient. It bounced back because people believed in its potential. They saw a future where digital currency could revolutionize finance. This early volatility separated the faint of heart from true believers. Those who held on were rewarded handsomely in the years to come. 2. Regulatory pressures. Fast forward to 2013 to 2014, and Bitcoin was on a roll. It had climbed back from its previous crash and was hitting new highs, reaching over $1,150. The future was looking bright, right? Well, not so fast. Regulatory pressures came knocking on Bitcoin's door. China banned financial institutions from handling Bitcoin transactions. This was a major blow. Imagine a government suddenly saying, hey, you can't use dollars anymore. That's the kind of impact this had on Bitcoin. It created uncertainty, fear, and the price plummeted. Remember Mt. Gox? Yeah, they got hacked again. This time it was even worse. They lost hundreds of thousands of Bitcoin, and it led to their collapse. This double whammy of regulatory crackdowns and another major security breach sent shockwaves through the crypto world. People were losing their minds, selling off their Bitcoin in a panic. But again, amidst all the chaos, there was a silver lining. These events forced the crypto community to take a hard look at itself. They realized that for Bitcoin to truly succeed, it needed to address these issues head-on. It needed to become more secure, more transparent, and more resilient to external pressures. This period of regulatory pressures and security breaches was a painful but necessary step in Bitcoin's evolution. It forced the community to confront its weaknesses and build a stronger foundation for the future. And you know what? They did. 3. ICO Boom and Bust. Hold on tight because we're entering the roller coaster's steepest climb yet, 2017. Bitcoin was on fire, smashing through all previous records and soaring to nearly $20,000. The world was going crazy for crypto, and everyone wanted a piece of the action. This was the era of ICO's initial coin offerings. New cryptocurrencies were popping up left, right, and center, promising investors massive returns. It felt like the Wild West again, but this time, it was a gold rush. People were throwing money at anything crypto-related, hoping to strike it rich. But just like any gold rush, there was a dark side. Scams, fraud, and pump-and-dump schemes were rampant. Remember, when everyone's trying to get rich quick, someone's always looking to take advantage. And then, the inevitable happened. The bubble burst. Regulatory crackdowns on ICOs and news of fraudulent activities sent Bitcoin crashing down from its dizzying heights. Just like that, it lost over 80% of its value, leaving countless investors devastated. Those who bought at the peak, fueled by FOMO, fear of missing out, were left holding the bag, wondering what hit them. This boom and bust cycle was a harsh lesson for many. It showed that even in the world of decentralized finance, hype and speculation can only take you so far. Fundamentals matter, and so does due diligence. Investing in crypto is not a get-rich-quick scheme. It's about understanding the technology, the potential, and the risks involved. 4. Environmental and regulatory concerns. Alright, we're in 2021 now, and Bitcoin was back on top, hitting a new all-time high of over 64,800 US dollars. The crypto market was booming again, fueled by institutional adoption and mainstream acceptance. Tesla, the electric car giant, even announced that they were investing billions in Bitcoin and accepting it as payment for their cars. It seemed like Bitcoin had finally arrived, but just like clockwork, another twist was waiting around the corner. Tesla's CEO Elon Musk announced that they were suspending Bitcoin payments due to environmental concerns, specifically the energy consumption of Bitcoin mining. This sent shockwaves through the market. Suddenly, the environmental impact of Bitcoin was front and center, and it wasn't a good look. To make matters worse, China, once a crypto mining powerhouse, decided to crack down on cryptocurrency mining and transactions, citing financial stability and energy concerns. This 1-2 punch sent Bitcoin tumbling once again, this time to around 30,000 US dollars. It was a stark reminder that even with increased adoption and mainstream attention, Bitcoin was still vulnerable to regulatory whims and environmental scrutiny. This period highlighted the importance of sustainability and regulatory clarity for Bitcoin's long-term success. It forced the industry to address its environmental impact, explore more energy-efficient mining methods, and engage with regulators to create a more stable and predictable regulatory landscape. The road to mainstream adoption, it seemed, was paved with both opportunities and challenges. 5. Market turbulence and major collapses. 2022 was a year of reckoning for the cryptocurrency market. Bitcoin, along with the broader market, faced a perfect storm of negative headwinds, leading to a significant downturn. The year began with the Federal Reserve's announcement of interest rate hikes, designed to combat rising inflation. This move spooked investors who began pulling out of risk assets like cryptocurrencies, seeking safer havens for their capital. As if the macro environment wasn't challenging enough, the crypto market was rocked by a series of high-profile collapses that shook investor confidence to its core. The Terra Luna stablecoin ecosystem imploded in May, wiping out billions of dollars in value and sending shockwaves throughout the industry. This event triggered a domino effect, exposing vulnerabilities in other interconnected projects and leading to further sell-offs. The final blow came in November with the shocking collapse of FTX, one of the world's largest cryptocurrency exchanges. FTX's downfall, fueled by alleged mismanagement and fraud, sent Bitcoin plummeting to a low of 16,216 US dollars. This event eroded trust in centralized crypto platforms and highlighted the need for greater transparency and accountability within the industry. 2022 was a brutal reminder that the cryptocurrency market is still in its early stages of development and remains highly susceptible to volatility and systemic risks. The events of this year underscored the importance of diversification, risk management, and thorough due diligence for investors navigating this rapidly evolving landscape. 6. Geopolitical and security challenges. Fast forward to February 2025, and Bitcoin, after recovering from the previous year's lows, was trading comfortably above 90,000 US dollars. The crypto market had shown resilience, seemingly adapting to the tighter monetary policies and navigating the fallout from the previous year's collapses. However, new challenges emerged, reminding investors that the road to mainstream adoption remained paved with uncertainty. Geopolitical tensions, particularly those involving major economies, cast a shadow over the global financial markets, including cryptocurrencies. The strengthening US dollar, fueled by its safe haven appeal during times of global uncertainty, put downward pressure on Bitcoin's price. Investors, concerned about the potential for escalating conflicts and economic sanctions, sought refuge in traditional assets, leading to a flight from riskier assets like Bitcoin. Adding to the market's anxieties was the news of a massive hack targeting Bybit, a prominent cryptocurrency exchange. Cybercriminals, exploiting a vulnerability in the exchange's security protocols, made off with an estimated $1.5 billion worth of cryptocurrencies including Bitcoin. This high-profile security breach sent shockwaves through the industry, reminding everyone that despite advancements in blockchain technology, vulnerabilities remained, and the threat of cyber attacks was ever present. Bitcoin's price tumbled below $90,000 as investors grappled with the implications of these geopolitical and security challenges. The event highlighted the interconnectedness of the crypto market with global events and the ongoing need for robust security measures to safeguard investor funds and maintain trust in the ecosystem. Despite these hurdles, the underlying technology and principles of Bitcoin continued to attract supporters who believed in its long-term potential as a decentralized and censorship-resistant form of digital currency. What lies ahead? So, there you have it. We've taken a wild ride through Bitcoin's history from its humble beginnings to its meteoric rises and dramatic falls. It's been a roller coaster of emotions, filled with excitement, fear, greed, and everything in between. But one thing's for sure, Bitcoin is a survivor. Despite these downturns, industry experts remain optimistic about Bitcoin's future. They see its potential as a hedge against inflation, a store of value in an increasingly uncertain world, and a catalyst for financial innovation. Yes, there will be bumps along the road, regulatory hurdles to overcome, and technological challenges to address. But that's the nature of innovation, isn't it? Projections for 2025 range from $125,000 to $500,000, driven by factors such as regulatory clarity and increased institutional adoption. Will these predictions come true? Only time will tell. But one thing's for certain, the world is watching and the future of finance is being written in code. Stay tuned for more updates and insights on the cryptocurrency market. And as always, don't forget to like, subscribe, and hit the notification bell for more content. See you in the next one. By Blockwave.